Hello everyone, welcome to my FOREX class. This is ICT Coin speaking. In this class, I'll be talking about one of my entry pattern I use for trade continuation. This entry pattern can be used in all asset class and you don't need to stress so much to see it on the chart for me. Now, we know that the FOREX market is a very large space and it comprises of different patterns to move price, either buying or selling, and you want to stick to the pattern which you identify the most that will give you a very high probability win rate, or if I must say the most probability win rate. If you are not sure of the pattern, if you're not sure of the entry, it's better not to engage in that trade until you see what you're familiar with or what you know that will give you a good risk to reward. In this entry pattern, I'm going to be explaining, you can use it for trade continuation, either on the higher time frame or the lower time frame. This is one of my most successful trade patterns. I have a couple of trade patterns. I'll be explaining them in different videos. I have like about 6 different trade patterns that I teach to my students. This trade pattern I'll be explaining today is one of my most successful trade pattern that give really high credibility win rate, and you can be most certain that price will go in your direction if you are patient enough to wait for it to what form and you get to see it play out on the chart before you strike your gun. Now, on this particular trade pattern, that's this entry drill, I'll call it entry drill. It has different ICT concept playing out in it from the higher time frame to the lower time frame. Now, let's dive fast into class. First of all, I'll be hiding all of these objects so you can see it clearly on the daily. All right. Now, if you go to the daily time frame, which is 24, beside this is derive, and derive. I'm using the pair jump 10 to do this analysis. This is to tell you that this particular pattern does not necessarily work only in the FOREX asset class or a specific asset class. You can use it on any asset class, either FOREX, indices, or even in derive. You can even use it in commodity asset class. Okay. Now, when I open this jump 10 on the daily time frame, I like to look at price from the daily standpoint first to see the overall directional bias. Overall directional bias, we can see that jump 10 is bullish. Overall, jump 10 is very, very bullish. What do I mean when I say bullish? When I use the word bullish, it simply means that price is trading in an uptrend. An uptrend making fractal movement of higher highs and higher lows. An uptrend making fractal movement of higher highs and higher lows. I'm looking for oh, I can't find this. Okay, let me just leave that and concentrate. Price is making fractal movement of higher highs and higher lows. Okay, now when price is making fractal movement of higher highs and higher lows, it simply means that price is respecting all of these bullish PDRAs. Price is respecting all of these bullish PDRAs. The high, the low, a higher high, higher low, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Then we now see this price making this very deep retracement. Okay, price made a very deep retracement. So now when price makes higher highs and higher lows, this simply means one thing: price is on a bullish trend. Okay, now overall looking at the trend, I see that on the standpoint price is bullish. But now looking from this angle, we can see that we are trapped in a daily range. What do I mean by daily range? When price is bullish, making higher highs and higher lows, we also have smaller structures that form inside of the trend. Smaller structures that form inside of the trend, forming internal range, sort of liquidity. All right. Now, when price form all of these smaller structures, they come in different patterns. We have to see trend line, we see range structures, we see accumulation where price consolidates sideways and then decide to engineer liquidity on the buy and sell side. All right. Now, this smaller scale here, right here on the daily, you see the price is trapped on this range. Price is trapped on this range. This is what we call a range structure, where price is not breaking out of the range, is respecting supplies and demand. We see how we create this low, we create a high. What? We fail to break a low, we fail to break a high, fail to break a low, fail to break a high. So we're forming a range structure. Now, when you trade supply and demand, you sort of look at this as a drop, base, and a drop, right? That's for those that does supply and demand. Now, that's not the main focus here. The main focus we're talking about today is the entry pattern for continuation, entry pattern for trade continuation. Now, I really don't use this pattern for my trend reversal in as much as it works, but I have a different pattern I use for trend reversal on the higher time frame, which in the course of my other classes, I will be explaining and showing you guys how that looks like. Okay. Now, when you look at this, we have this high and this low, and we'll break above this supply here. Now, what do I mean by supply? We break above this bearish order block. We'll break above this bearish order block. Therefore, making, let me hide it. We'll break above this bearish order block, guys. I hope you can see it. Let me pick up arrow. We'll break above this bearish order block right here. Now, thereby making this imbalance at this spot, this is what we call the bullish fair value gap. Now, we want to see the presence of smart money in the market. They usually leave gaps. They leave all these gaps. We'll call them fair value gaps, either a bullish fair value gap or a bearish fair value gap. And we have other ones that are very massive in movement. We'll call them BCs and CBs, sponsored candles. These are sponsored candles, but this is the fair value gap left as a result of this impulse to the upside, and we displaced this bearish order block right here. So we had a close above it, making that level a break of structure. All right, so we closed above that bearish order block, making it a break of structure to the upside. Remember, when I started explaining, I talked about price trapped inside of this range, and we've had this form a U-shape one, a U-shape upward one. That's a bearish downtrend inside of the range, tapping on the trend line at the discount price, and we see how price make a U-shape up. That's one. We see it doing that again two. We see it doing that again two. We see it doing that again the third time, tapping on the discount of the range trend line, the discount of the range trend line. All right. Now we see price still approaching the premium of the trend line, so we want to label this. Want to label that a minute. I don't think there's need for it. We'll label this tap 1, tap 2, tap 3, tap 1, tap 2, tap 3. This is going to be the fourth tap. Price will be tapping on the premium of the range trend line above. Then this is what tap 1, tap 2, tap 3. All right, so we are having the U shape again forming to the upside. Now let me use a path to draw it. We have this discount premium, a completion of price trading from the premium to discount. We have it right here again, price trading from discount to premium, price trading from premium to discount, discount to premium, premium to discount, discount to what? Premium. Now, before you look at price from a lower time frame standpoint, most people don't believe on top-down analysis. The whole essence for that is because you just want to see where price is going. If you are the type of trader that wants to hold the long term, or if you are the type of trader that usually do scalping on the 1 minute and 5 minutes, you don't have any business with the daily. You might just want to look at what the overall trend is on the 1 hour time frame. That's quite fair enough for you, because the 1 hour time frame we give you your essence of price 2 days behind and 2 days where price is going 2 days ahead. Okay, now when you look at this, you can see that price is just trapped here. Now if you are a trader and you're looking to sell all the way to this low, not mean that price is trapped here, you would be caught up in break evens. we cut up in break evens. And before price started trading inside of this range structure, what was price doing? Price was trading down. We had the high, the low, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. And we have this bearish order block right here. We have this bearish order block right here. So, and that is where price is being navigating from. You can see we tap it perfectly well, and price started navigating from this order block, still trading down. Now, where is the possible level or zone price is reaching out for? Where is the possible level or zone price is reaching out for? To me, if I want to say on the daily where price is reaching out for, based on the fact that we are having price overall bullish, all right, we're having price overall bullish, and this was the last time we had a drop before we had this impulse to the upside. This was the last time we had a drop, which is a major structure. Now, you know, when we have a trend, we have major structures, we have minor structures, we have major structures, we have minor structures in any trend. Now, for the trend to consistently keep moving in that direction, you want to see price respecting the major structures. Okay, you want to see price respecting and not displacing those major structures. And this candle left from this fair value gap, this daily fair value gap right here. Now we can see that we dip down into this daily order block right here, and this candle was responsible for that. So what is now left for us to look out for? We're looking at this level, because this is the level that tap into that daily order block, and we have it right here. You can see how price tapped into that level. So this is the candle currently now that we are looking at price trading into. This is the candle we're looking at price trading into, because we stab into this major structure right here. This is a major structure. We have this dip on the daily, then we have this gyrate to the upside. Okay, now we have this daily order block at this spot, and this is a possible area price can be reaching out to. And if you want to know the appropriate level to now take your entries, you want to wait. First of all, I like to refine to the lower level, but you want to wait and not be too fast. But this is not the main thing. Main thing I'm going to be explaining today is still above. I'm just giving you the overall standpoint on the daily, what I'll probably be looking out for on the jump 10. Okay, now when you go to the daily again, you can see we have this fair value gap. Remember, I talked about us breaking this demand, this supply here, this daily bearish order block, and this daily bearish order block was the last time we had price trade down and took out a demand zone. We stabbed into this low and took out liquidity. Now we have displaced it, leaving this words imbalance. What happened? I opened my chart rather, and I saw how we traded into the fair value gap, completely into the fair value gap. We traded into it, mitigating the fair value gap and repricing this level. Now we have three ways at which price reprice the fair value gap. We have when price tap into the premium of the fair value gap, we'll call it an entry drill, which is an IOFED, 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 IOFED. What does that simply mean? That simply means institutional order flow entry drill. Institutional order flow entry drill. The price tapped into the premium of a bullish or a bearish fair value gap, we call it IOFED. If you look at it carefully, okay, I'm going to hide all of these objects. I'm going to hide so that I have it looking neat. Yeah. Now, if you look at the fair value gap right here, daily fair value gap, and price tapped into the 50% of the fair value gap and trade it down, not completely filling it. When price tap into a fair value gap up to the 50%, for an order block, we call it main threshold. For an order block, we call it main threshold. But when it comes to fair value gap imbalances, we call it consequent encouragement. Consequent encouragement, CE. So when you see me label CE, that simply means consequent encouragement. Consequent encouragement. Then when price completely fill the fair value gap, they will say is a complete fill. Complete fill. That's a CF. Complete fill. All right. Now we tapped into the 50% of this fair value gap. This was the candle I saw when I checked as of yesterday. I saw that we've tapped in. We tapped in first, did an entry drill. Then what happened next? We dip in and raid the candle that tapped into the fair value gap. This is so sweet. When I see things like this, I feel super like, okay, I love what I'm seeing. We are seeing a raid of a candle that trades into an imbalance. We see a raid. This candle raided this candle that trade into this imbalance, and I saw our price was pushing up. We closed above this bullish candle, signifying a bullish continuation, but we closed as a doji. Okay, now I see this day as a weekday. I see this day as a weekday. Why? This candle closed, but was not able to close with a body candle above, showing that this candle, this day, which was on Friday, was a weekday. So I see the low of that Friday as a week low, and I was looking at price trading back into that level, probably eliminating the low for Friday. Then now get to see a bullish continuation, because we've seen, obviously, we are reaching and moving forward for this high. Remember when I started doing the class, what did I show you guys? I showed you guys a range structure. And where is the range structure high? This is it. We'll see how price has been buying inside the range and selling. So if we're reaching for that top of the range, then this is just a tip of the iceberg. You can TP at that level. Okay. Now I'm going to be deleting all of this IOFED, complete fill, and consequent encouragement. I'm going down to the 4-hour. So daily, you've seen that we're definitely pushing up, and it looks super good, super clean. All right. And I saw this bullish order block right here. So I decided to trade down the time frame to a more lower time frame to see what the structure looks like on the 1 hour. So I went down to the 1 hour time frame. On the 1 hour time frame, I saw it so clean. I saw this accumulation. When I see an accumulation, what I want to see next is a manipulation. I see the trade down into the fair value gap. That's the manipulation. I saw the break of structure. Now I'm going to bring out this other object I hid, so you can. Now this exact trade you're looking at, I gave it before the facts. I gave it before the facts. I gave it before the facts. Now let me go copy it and post. Let me copy it from my channel and show you guys. I gave it before the facts. So it's not like price has gone and I am working on insights. No, this is not a trade for insights. This is a trade that I gave before price even started moving. Now this is, oh, I can't post. I think derive is not possible. It's not possible on derive. Okay, I think I would, let me just use this. Let me use this. Let me use FOREX chat. I can copy and paste if the FOREX chat. Let me show you guys this now. This is it. So this is not like, this is the chat. This is the trade right here. So it's not like I saw it when price already left. I gave it before the fact. So we're going back now to the chart illustration where I was giving the explanation. I just want you guys to see that I saw it before price started playing out. You can see price just started playing out. So it's not like it's already played out, then I'm just showing you something that is fake and is not real and all that. No, that's not the case here, okay? If you know me very well, you know that I always like to give my trade before the fact, and I have my chart patterns to back them up. So this is the pattern right here. You can see the accumulation, see the stabbing down, manipulation. You want to see this impulse. You want to see price giving inducement, a raid and a re-raid. You want to see price giving inducement. Now, sometimes price might stab into the inducement just once. It's totally fine. But sometimes price might raid the inducement twice or 3 times. That is extra high probability trade. They are trying to weed out buyers or sellers as much as they can before they leave. We see them raid 2 or 3 times and they still respect that level. then you might want to stack on that level, because once they rate buyers or they rate sellers a couple of times, that level is very significant to them. They just don't want many participants, so they'll do that to shake out everybody that they want to reduce as much as possible. So when I saw this accumulation, I like to box my accumulation, and I said this manipulation down, and I know that okay, there's something that looks nice here. What happened then? On the smaller time frame, I saw this break of structure. That this is a change. I called it a change in state of delivery. A change in state of delivery. CIST. Change in state of delivery simply means that we're going on these lower highs and lower lows. Now we have seen a displacement. This is an impulse to the upside. All right. That's pretty fine. Then what made this level very, very valid? What made that level very, very valid? I'm going to be removing the fair value gap and push it this way a little. What made it very, very valid? Okay, this is your fair value gap. Remember, our daily fair value gap. Don't forget. We have this other block that is formed just above this other block right here. I'll go to a lower time frame on precisely 30 minutes. You see this clearly. Now I'm going to go to 30 minutes. Now this is the other block I used on the 30 minutes. See our accumulation, see our manipulation, and we see the displacement. I saw this other block right here. I took first buy on this other block, and you notice that they gave a first buy here. They failed to break above the high, telling us the low is weak, which is still a lower high. Came back down and read this low into this other block, making it seem as if they are ready. The very minute I saw they failed to break above the supply, they came back again for a re-read. So this now becomes my inducement. This is my inducement, where they induce the first set of buyers into the market. Now they push up and still failed. Now the fact that they came back to raid again, this now becomes my what? My ROXS. What does ROXS means? ROXS simply means that a raid of liquidity. I use SS as my alphabet for liquidity. A raid of liquidity. A raid of liquidity. This is like my inducement, which is my XXXS. Now they raid the inducement again, which is a raid of liquidity. Still respecting this level. If you notice, they never break below this level. Still respecting this level. You remember this high we saw on the daily? Still inside the range structure. That's my target. That's my target. Not extending far into the premium of the range structure. I just want to TP at that high, because that is the high that facilitates this O push to the downside. That's the sponsored high. This is the high that facilitates this O push to eliminate this low. That is the high that facilitates this push to the downside to eliminate this low. This makes it automatically a sponsored high. So that is where smart money will be targeting to offload all of these buys at premium price. And if you look at the daily fair value gap, look at it carefully on the left side, you see a very tiny order block right here, and that was where they moved price. This level, that was where they moved price. That caused this break of structure. So they left from this daily fair value gap a smaller order block, 30 minutes precisely order block inside the daily what fair value gap. Now we return back into this order block. The other block is what I call my sponsor candle. This is my sponsor candle. This is my sponsor candle. This is my sponsored candle. This is my inducement. This is my ROXS, which is like a raid of what? Liquidity. A raid of what? A raid of liquidity. That's my inducement liquidity. They raid the inducement. After taking out the inducement, they drive back down and still raid the inducement. Now we're seeing a very clean and very nice drive to the upside. See the low, high, higher low, higher high. We start forming very clean structures of higher lows and higher highs, impulsively buying all the way to our sponsored high. The high that sponsored you moved to take out the fair value gap, the daily fair value gap, to reprice the daily fair value gap. Remember what I said? I gave this trade before the fact. This is it. Before the fact. Now this is the structure for this pattern. So anytime you see this pattern, sometimes we'll just read once, which is just the inducement. They take out the inducement and off they go. is still okay. But when you see them raid twice, see how they raid this low, they raid this low, they push up and still fail, they came back down and still raid this low inside that other block. Now all of these other blocks at this discount just above this, they were all taken out, not because this level is invalid. This level holds more validity to them, so this was all they needed to create their inducement, just to validate this lower sponsored candle level. So I always prefer a sponsored level. So this is it for this pattern. Now, how would you know the validity of this pattern? There are certain things you want to see. What are the things you want to see? First of all, on the daily, you want to see on the daily, if you're looking at a fair value gap, a daily fair value gap, right? You want to see price creating a pivot swing point. What do I mean by a pivot swing point? You want to see price creating this. Let me go to daily and show it to you. This is a pivot. Low, a lower low, and a higher low. That's a pivot swing. You want to see price creating what? That pivot swing point. All right? It's really, really important. If you are looking at a fair value gap on the daily time frame, you want to see price creating that pivot swing point. Okay? It's really important. Take note, guys. Very, very important. You want to see price creating that pivot swing point. Let me delete this. On the daily, you want to see price creating the pivot swing point. That's the first thing you want to see on the daily. All right, when you see that, then what are you looking at next? You're looking at next, you're going to your lower time frame, which is your 1 hour or your 30 minutes, precisely to get your area of interest. 1 hour or 30 minutes precise to get area of interest. You don't want to go and take an entry from a level that you'll be liquidated. All right, now we're going to look at this. What do you want to see? You want to see the power of 3. This is how you draw your confluence for this pattern. When you're looking out for this pattern, these are the things you want to look out for. If you're looking out for the pattern on a daily fair value gap, you want to see a daily creating pivot swing points. You want to see daily creating a pivot. So you want to see daily creating a pivot swing point. Then the next thing, you want to see your power of 3. Now, most of my entries always have the power of 3, but you see that the patterns, most of my entry drills, this is one of my entry formula. This particular pattern is used for trend continuation. Remember, I mentioned that at the beginning of the class. So, but most of my entry pattern, I always want to see a power of 3. Now, power of 3 simply means let's see your accumulation, the manipulation, and distribution. All right, you won't see this power of 3 form. When you see that power of 3 form, where is it? Look at your accumulation, see the manipulation into the daily fair value gap, and you see this impulse to the upside. Now, when you see that impulse to the upside is breaking and displacing a supply level, don't be in a hurry. Wait. What is your next point? I'm giving you how to now watch out for this pattern. You want to wait for what? Price to come back to your sponsored candle. You want to wait for price to come to your sponsored what? Candle. These are the steps. Now, when price is coming to a sponsored candle, how do you see that this thing is really what you've been waiting for? You want to see. Remember, I talked about the accumulation, manipulation, right? Distribution. You want to see your what? Your sponsored candle. You want to see your sponsored candle. After you get your sponsored candle, now when you see your sponsored candle, sponsored candle, you want to see your what? The break of structure. Want to see your break of structure. All right. After your accumulation, your manipulation, distribution, want to see the impulse break of structure. That's impulsive break of supply or demand. All right. After the break of structure, you want to see, to validate it, it has an inducement. Want to see that it has a what? It has an inducement. Inducement gives that level validity. All right. Now you can see that it created the inducement. There was no other break of. After I break the structure, we created an inducement. We didn't break the high that would caused the what? Break of structure. We didn't break the high that was used in breaking the last supply. We create that high. We saw an inducement. Price trade back. We traded back up again, still not breaking the high. So that low was what we had as our what? Inducement. We had that as our what? Inducement. We had that low as our inducement. So you want to see your inducement is very, very important. After you see the inducement, you want to see a raid. A raid of your inducement. You want to see a raid of your inducement. You want to see a raid of your inducement. After the raid of your inducement, like I said, it's not compulsory they have 2 raids, but sometimes they have a re-raid. Look at this, we have a re-raid. This was our inducement. We raided the inducement, we push up, but still failed to break what? The supply levels. We still failed to break this bearish order block. We have price drive back down and made a re-raid. Making a re-raid does not mean this level is still invalid. They're just trying to shake off many buyers as possible. This level is still very valid. So sometimes you might just have your inducement and a raid. Sometimes you have your inducement, a raid, and a re-raid, right, into your sponsored candle. Now, the reason I put the sponsored candle first is for you to know that after your accumulation manipulation, you are only waiting for price to drive back to your sponsored candle. You are not jumping in on any level. You're waiting for this level. You're not using your breaker. You're waiting for the sponsored candle. All right. So when price do a re-raid, that is when you will look for either a raid of your inducement or a re-raid of the raid that took out your inducement, before you now look for your what? Entry. Before you now look for your what? Your entry. Your entry is always going to be inside of your sponsored candle. So if you do anything outside of this thing I gave to you right here, you might have price liquidating you. So this is how you look for the entry for this particular pattern. And this pattern is used for trend continuation. Trend continuation. This is how you look for entry on this particular pattern, and it's for us for trend continuation. You saw that the price trend is bullish, and we just have to take advantage to continue on the trend, to join in on the trend, to take advantage of what price is already delivering. All right, so you have to look for all of this to form and play out, and it's seamless. It's not like you're going to be doing any serious work. When you just see them forming, you try to be calm enough and be patient and wait for price to come towards the sponsored candle. I'm going to show you another one. I'm going to be explaining this on my next class. I'm going to be doing the next class. This one has no inducement but played out perfectly well. This is also from a daily fair value gap. I'm going to be explaining this on my next class. This is another of my entry pattern. This is another of my entry pattern, and this entry pattern does not have inducement, so it's sort of very tricky, but it plays out perfectly well. So among my entry formula, I'm going to be explaining this on my next class. I also have this as well. This is another of my entry pattern. You can see we have our inducement, we have all of this level. I'm going to be explaining this again in another of my class. I'm not going to be explaining it on this class. I'm going to be making this video in another class explaining how I got this entry, and this is also derive. This is V251S. This is also derive. This is V25. All of this entry pattern is so seamless, and you see them multiple times. If you use them, you have a lot of good trade frequency. You can spot them on the 1 minute, you can spot them on 3 minutes, 5 minutes, 15, 30, 1 hour, 4 hour. It all depends on if price is giving you exactly this pattern I just explained to you. So I'm going to be explaining this pattern as well. This is under my entry pattern. You can see we have our inducement right here, and this is for also trade continuation. This is for trend continuation. All right, so this is all I have to explain to you in this particular class. I hope you get to use it perfectly well. Try to spot all of this entry. If you're not seeing it complete, do not engage. But when you see all of this forming complete and you see all these confluences, you see the confluences of power of 3, you see the confluence of daily creating a pivot swing point, you see your sponsored candle, you see your inducement, and it's going in the direction of the trend, you know that you're doing something right. You can leverage on it very well and make as much money as possible. Now, for those that will be taking this trade, if you are seeing something like this, you can TP at this first level, because when price take out this level, they're obviously going to be retracement. You can take full profit or probably 70% profit at this level, break even, and run very much risk free. This pattern I just explained to you is not rocket science. It's not something that you have to search and search and search to see. Plays out almost every other day, and it's very seamless, and is one of the highest probability trade pattern you can get in the financial market. This can change your life, and this can make you that profitable trader you have always dreamt of. Trading just this exact pattern I explained today can make you a very profitable trader. Do let me know what you think about this particular class of today, this entry pattern, one of my entry drill formula. If you do love it, leave a comment on the comment section. Let me know what you think, and let me know how this video has impacted you today. I look forward to every one of you being in my next class, and please do well to subscribe on my YouTube. Give me thumbs up for anyone who comes across the video, and I might find this really beneficial to them, so they can also get to watch it as well. Kindly share to your friends, to your loved ones, and share your journey with me, share your results with me. If you use this pattern to trade and you've made significant profit out of it, do share it with me. You can always subscribe to my Telegram channel. It's super free, where I share daily trades and I give you inspirational psychological quotes, Christian quotes, to build you up for a better person tomorrow. I love every one of you. Thank you for sticking around this class. Still speaking, I City Queen, speaking from the Federal Capital Territory of Nigeria. Thank you guys, and love you.